Religare has undergone a restructuring exercise where they will be you know, doing a scheme of arrangement with their existing company, dividing it into three parts, and all the three companies would be separately listed. To get more details into it, the management is now joining us. Sunil Godhwani, Chairman and MD at Religare Enterprises. So if you could first start by what is essentially the corporate structure that we are looking at, how are we looking to simplify the existing business?
You know, Religare about a year back had four large businesses under it: the asset management, the lending business, the health insurance, and the capital markets. Over the last few months, we took a strategic decision to divest from the asset management space. In the last 6 months, we have implemented on that, and today what we house under Religare Enterprises is the SME lending focused business, the health insurance, which is very retail, and a diversified capital market business. Clearly, the intent of demerger is to unlock the value under all these structures and to simplify the corporate structure. What we intend to do is create an enabling platform for each business to attract and draw its own capital and a series of investors. So what it does basically today, in the holding company, we enjoy, the holding company gets a discount of close to 30 to 50%. And an investor coming into any one interest in the business gets saddled with two other businesses he may not be interested in. So with this simplification of structure, we are creating an enabling platform for each business to get listed on its own merit and continue to attract growth capital as and when it needs it from its series of investors.
Right. The holding structure or value unlocking via the discount that is there, any other benefits?
When you're unlocking value, it's clearly creating value for the stakeholders and the shareholders. So what happens today, as I said earlier, if somebody is taking a stake or coming in equity into Religare Enterprises and he has interest only in the lending business, he gets saddled with health insurance and capital markets. This way we can have specific sector focused investors come in, and at present all our businesses are adequately capitalized, but going ahead they will need growth capital. So this will allow them a sort of a platform to attract their growth capital and unlock value at the same time. So, clearly the 30 to 40% discount in holding is significant, and under a holding company is very significant, from any aspect.
Will this also lead to strategic investor coming into any of these entities in the near future?
Of course, that's the whole intent. So at present, it's not as if we are hungry for any capital, but definitely once the structure is simplified, it will create an opportunity for strategic investors to come in into any of the three businesses.
What is the process of demerger? What's the timeline? Will it take long?
Yeah, there's no shortcut to this process. So in the next 30 to 45 days, we hope to get all the regulatory and other customary approvals into place. And then we'll take it through our board meeting, and the lawyers put together a scheme of arrangement which is filed with the High Court. The High Court approval normally takes anything from 4 to 6 months. So you can say on a pessimistic safe period, you're looking at it an average of 12 months before this happens. It could happen earlier, but I would say we have to take into account an average of 12 months before the companies get listed on its own strength in the exchange.
Right. In terms of growth, can you just divide the three verticals for us and tell us what they have achieved so far?
See, Religare Enterprises, when it got started and I joined about 16 years back, clearly was a very capital market brokerage focused business. From that business, we have grown. From a life insurance which we divested out after a JV with Aegon, into mutual fund which we sold out to Invesco, and then we also exited the entire asset management space. Today, we are a totally focused India story. The SME focused lending business is clearly a story which India needs as SME is the growth engine of the country. So we are expanding into retail, having a book size of about just over 18,000 crores, but a very SME focused business of 16,000 crores lending in there. On the health side, we have a business which is retail again, but clearly a health sector is a focus going ahead, and the country is heavily underinsured on the health side. So this is again a retail business. We have done a premium of close to 500 crores in the last year, and we continue to grow it very aggressively going ahead. I forgot to mention, under the lending business, is our Religare Housing Finance Company, which is a model on the affordable housing business that is again a growth sector in India. The book size there 800 crores and is really poised to grow exponentially over the next few years. The smaller of the three businesses, the capital markets, is a diversified B2B, B2C distribution platform. We are in close to 500 cities and over 800 offices. So that business acts as a very strong distribution support to other two businesses.
Right. So you've been a part of the Religare Capital for quite some time now. You've looked at strategy, you've looked at markets, and there's been a lot of talk about India, how India is outperforming. What's the sense that you get in terms of India and the outperformance from here on?
You see, I always feel that the perspective of being bullish or bearish, these are only words. But in fact, if you look globally today, the India story is very intact. If you look across the globe and look at various economies, which is the economy which has a capability to grow at a 5 to 6% plus, it really requires no-brainer, it is India. More important than that, we are tracking a growth of 6% plus over the last year. I think the investors gradually, as the country matures, as the depth in equity markets, as the bond markets become more deep, and the people are getting a lot of interest into coming back into increasing their equity in India. Clearly, the days of returns that private equity investors or investors or FIs internationally have got historically used to returns of 20-25%, it's not going to happen like that. I think they need to take a much more long-term view and a slightly more conservative view, because the Indian market is maturing and there are going to be phenomenal stories in this country going ahead. For our perspective, I think we are absolutely in the right place, right business and at the right time. The demerger adds so much more value to our capability to penetrate further and build these businesses that I'm sure over the next 3 years, you will see from Religare perspective and from the investor perspective how much value we will provide.
Right. So thank you so much for taking out time for us, and hope to see you again quite soon. Three big numbers yet to come out. M&M, of course, has declared numbers. You heard the management. Tomorrow morning, these three companies would be in focus. Tata Motors, Aurobindo Pharma and Sun Pharma. All these three companies would be in focus. Let's start with Aurobindo Pharma. As far as sales are concerned, 3,712 crores, PAT at about 5